Hey everybody, Courtney Smith here with our May 23rd edition of Wall Street Winners. Let's dive right in here. Well, what can I say? Did I mention it was a bear market? Yeah, I kind of think I said that back at the beginning of the year. So we're 5 months into this bear market, but this bear market's going to continue for months on end, 12, 18 months, something like that. So just get used to it. Get used to it. It's a bear market, don't you know? Dow Jones, look at all the selling pressure up here. Very little buying pressure. The Dow's getting hammered. And this black line is ADX, which is confirming it's a bear market. NASDAQ actually showed a little bit more strength than the others. It did break the low of a week ago, but not by much. Nonetheless, it's in a bear market too. Now, one of the things, though, is that we have to be very concerned about what are called, I swear to God, dead cat bounces. So basically, because the market has plunged so much here, we could see some type of a little bit of a rally here. Seasonality is neutral for everything, but here we go. See, we've got a little bit of a rally here. So don't be surprised if we see the rally, but we need to use that rally as a selling opportunity, because then we get into a nice down move here as we go through June. So June's going to be a very weak month for the market as well. Then we'll start thinking about a nice rally like we had a few months ago. But one of the problems is that money, this is our asset allocation model, and it shows that money is flowing out of the stock market and into bonds. People really want the safety of a bond because all bonds mature at 100. Well, unless, of course, they default. So this is showing that money, all through this period, we had money flowing into the stock market. Now we have money flowing out of the stock market. Tremendous billions of dollars of outflows from ETFs, for example. Stock market risk indicator, a little bit of a rally here, but still, since November of last year, the market has clearly been saying we don't want a lot of risk. So that means that things like consumer staples and utilities they're still down on the year, but they're not down as much as, say, IT or communication companies, things like that. But I have a feeling that we're going to be getting pretty soon to a bottom on the NASDAQ, but I'll let you know when that's going to come, but we're not there quite yet. So once again, they want less risky stocks. Global shares had actually a pretty nice little rally here. Why? I'll get to it in a second. But a little bit of a rally here, I want to use that as a selling opportunity as well. Yield curve, we've hammered on this one a long time. Here's the bonds. I said last week I thought they'd rally. I think we're going to continue to see a little bit of a rally here. Thought it would be stronger than this. This is very weak. But nonetheless, I called the rally. We got the rally. We're going to continue to see the rally because of our bond key factors. Down, down. However, one of them is going up. So we've got two saying lower yields, one saying higher yields. That means we're going to have weak but lower yields. Dollar, this is why the dollar is why bonds, you could see right here, the dollar moved down. I think it's going to continue to move down lower because of the interest rate situation. As interest rates move lower, it makes the dollar less attractive. So look for a very sluggish down move, not a big move, a sluggish down move. But gold will rally a little bit, but come on, this is a bear market too, so we can't really get all that excited about gold. I'd rather be short than long, but I'd rather be short platinum. Gold key indicators are, is this bullish? Kinda. Really, who cares about gold? We're not going to make a lot of money in it. It's too neutrally. But this is where I've been saying now for 2 weeks, I think we're going to continue to move higher on oil. I look at the fundamentals of oil. I see the demand is still strong. The supply is being choked off. Obviously, Russian oil is making it to some markets, but it's reduced. We're going to see more oil come out of the United States, but it's going to take a while. This should move sluggishly back up to the old highs around 130, and you can see that the smart money as witnessed by the purple predictor, is long oil. And I want to be long oil. I think we're going to get a nice rally up here. So I'm going to get long energy stocks again, and anything having to do with oil, nat gas, even better. Bitcoin, it's a bear market, but I don't want to be short right now. Simple reason, this is very stable. I like that. Purple predictor bouncing up, showing that a lot of smart money bought this. They bought it, but they didn't buy enough to get it to rally. There's still a lot of liquidation, so we have a stalemate. Whichever way this breaks out, that's the way I want to go. If we break up, I'm going to want to get long. If we break these lows down here, I'm going to want to get short. All right, freebies, love having you here. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.